We're smooth 98.1 FM. Good morning and welcome to Business Express. It is time for us to talk about everything business. And what a way to kickstart the Monday morning. Let's get into Nigeria's exchange rate situation as we've got a guest waiting already. Kayode Olayemi, founder, Thrive Financial Advisors, joins us this morning. Good morning to you.
Good morning, Was. Good morning, Lagos.
All right. Just before we get into the conversation, we'd like to let you know how you can be a part of it. We're streaming live on our YouTube channel, so you can catch that Smooth981. You can also tweet at Smooth981 or X at Smooth981. And don't forget the WhatsApp number is 0809 444 0981. Talking about Nigeria's exchange rate situation. Kayode, the naira has fallen to 1,300 to the dollar. This is the level currently at the parallel market. Official rate 891 naira to a dollar. Can we argue that this fall is tied to the demand for it?
Thank you. So the demand is quite high, but I think that what we have is an issue of supply. So that's the big issue, the fact that the supply is quite challenged. And that's on many fronts. First, you have capital importation that is quite low, significantly low from where it's been in previous years. So for instance, capital importation, which is money coming from abroad for foreign direct investment, foreign portfolio investment, and all of that. In Q3 2023, we had $654 million. If you go back a year before that, Q3, that's the third quarter of 2022, we had $1.2 billion. And if you just even go down a couple of years back, because this current exchange rate situation started, I think, around COVID. So if you go to Q3 2019, we had $5.6 billion in a quarter. And that same year, we actually had $8.5 billion in the first quarter. So we're down to 654 million. That's a significant gap in terms of the supply of dollars into the economy. On the side of crude oil as well, there's also significant short decline in the FX inflows coming into the country from crude oil sales. So what we have in our hands is a supply side issue at the moment. The demand is quite high. I mean, the demand has increased due to many reasons. People are traveling for tourism, medical tourism, education, and all of that. But I think what we have is a supply side problem.
So most persons, it's agreed now, even for someone who's not a graduate of economics from Harvard or probably from the Lagos Business School, you'd understand that the purchasing power is very weak at the moment. So do you expect the pressure on the dollar to, ease or continue at this time?
So like I said, the demand is there. The demand is quite significant for obvious reasons, even in spite of the purchasing power challenges that we're facing in the country at the moment. So I don't think that necessarily impacts the exchange rate. What would make things get better is the supply side of things, or probably get worse is supply side. If supply gets worse, then the exchange rate could potentially get higher than where we are right now. So demand, I don't think that changes much at the moment.
So that leads us to the question of, this debate, is Nigeria a dollarized economy?
Not quite. I mean, when we say dollarized economy, it means that transactions are happening in dollars, and maybe that's even official. But yes, there are quite a number of businesses, individuals who, when they're quoting prices for their business or their transactions, are quoting in dollars. But we're quite a long way from that. We're not a dollarized economy yet. There's still many transactions that we're doing in the country that are done in the Nigerian naira. So we're not quite there yet. But I can see a lot of businesses doing that already.
So Olayemi, the question again is, if you say we're not quite there or we're not a dollarized economy, for some persons, for the woman who sells pumpkin by the road or roast yam and bole and all that, when you mention the reason why your plantain isn't as much as it used to be when you go to purchase, the thing she tells you is she might not even have seen a dollar bill in her life, but she tells you dollar don't go up. So, and yet, what do you still say that we're not a dollarized economy? Is the talk on everything?
So the thing is this, see, everything is connected in an economy like Nigeria, everything is connected. So if the person who is importing petrol, the person is using dollars to import petrol. So if the price of petrol goes up, that affects the cost of transportation, and that also trickles down to the price of plantain, or whatever it is that that person selling plantain is buying. She's buying from someone who is impacted by the exchange rate. So it sort of goes round and affects everything, because in Nigeria we import a lot of things, right? So the fact that the exchange rate has moved up impacts the cost of things that everyday person, business people, the cost of things that they're paying for. So in some way, is going to trickle down to the price of garri, the price of plantain. Yes, plantain or garri may not be imported or whatever it is, but I mean, they are going to end up going to the same market, right? And if the price of things that are imported have gone up, then the person has to increase the price of these goods as well.
Mm. All right. So, some people, I'd call it a school of thought, is of the opinion that perhaps the interest rates need to continuously be increased by the CBN on these OMO bills so that they can remove the naira liquidity and so that dollar demand can fall. Do you agree with this strategy? Is it something that could work?
I think that the CBN is probably going to, I mean, someone is expecting that they would increase interest rates at the next MPC meeting. Now, yes, I mean, interest rates probably need to still go up because real returns in Nigeria is negative at the moment. Now, I don't necessarily think that that would solve be the solution to the problem we're having. Now, the previous managers of the economy, the way they handle things, have resulted where Nigeria is an institution whereby there is a crisis of confidence, particularly from the foreign investors who are the drivers of capital importation that I mentioned some minutes ago. Now, if we increase rates to 30%, I'm not necessarily convinced that they're going to be coming back into the country in droves immediately. And by increasing interest rates as well, or automobiles and things like that, we're going to be impacting the local economy in terms of productivity. People are going to have to borrow at a much higher rate for business or just basically consumer loans, right? So it's a thing that they can do, and I think that they're probably going to do it. That's the CBN and the MPC, but I'm not necessarily sure that that's going to immediately result in an improvement. But it's a step in the right direction, and we can only hope that some people start to get confident about the Nigerian economy and start to come in again into the system.
All right, for if you're listening right now to be part of Business Express this morning, we're looking at Nigeria's exchange rate situation, and our guest Kayode Olayemi is helping us make meaning of all of this and more. And so make sure we get your thoughts before the end of the show on 0809 444 0981, 0809 444 0981. So you touched already on the issue of the monetary rate increase. You're not, because you had said probably you're not even sure if it would work. So we'll just let that wait until they do that at their meeting in February. So the question is about the Naira purchasing power earlier. If inflation continues to rise, is that the chief culprit of the loss in the Naira's value?
So yes, inflation sort of summarizes all the factors that are driving the increase in the decrease in the value of the currency, right? Which includes things like foreign exchange devaluation, the devaluation of currency, includes the impact of banditry on food supply and all of those things. So yes, we can say it sort of summarizes the decline in the value of the Naira. That's pretty much what inflation tells us, the decline in purchasing power.
All right, thank you for that. I think we've got a message coming through. Yes, let's go on to WhatsApp. It's coming from Benga Akamu, and he says, we are still not focusing on manufacturing the way the country should. How do we become productive? All right, thank you for that message, Benga.
So while you link that up for us, just quickly help us understand, can one realistically ask Nigerians to pull their children from foreign schools? Because that in itself as part of the consumption and the request for dollars to pay fees and all that?
Yeah, so that is a major source of the demand. People going abroad for school, tourism, medical tourism, and all of that. Realistically, I don't see how anybody's going to say to a private citizen what to do with their money, right? So how do you legislate that? How do you police that sort of policy? It's not fair to do that, right? So I don't think that they're going to be I don't think that's going to be on the cards. That seems quite unfair, because we can see that the people who are in office, that's something that they're doing. So how then do you now legislate that for the rest of the country? It's unfair, and it probably even puts the country more into that dark side, where it looks like the policies are how do I put it now, slightly unfair to the population, right?
Hmm. So is there any chance on earth that this FX liquidity issue can actually be solved realistically by the end of this year?
There's nothing that says it can be solved. The question is, would it be solved within a year? A number of things that could sort of lead to an improvement is improvement in, like I said, increase in supply of FX from foreign investors into the country. If the government, the CBN, is able to convince foreign investors to come back into the country by whatever means they are able to do that, then we see an improvement in supply. If there's some increase in local refining capacity for crude oil, because that is also a significant source of demand for FX, if there's improvements in local refining capacity, whether it's one of the government refineries or one of the private refineries, then that's an improvement in supply that can sort of impact on the exchange rate.
Now, well, as we begin to wrap up, you just touched on Benga some concerns where he talked about focusing on manufacturing the way the country should. That's one area you've mentioned already, but let's clear up your tray with the final item we've got here. Would you, as an advisor, advise citizens to, who are listening right now, to open up dollar-dominated investment accounts?
Okay, so that's interesting, because obviously if everyone starts to do that, that's also part of the problem, because that's also going to be additional demand for the US dollars and for FX. However, I don't know what options the private citizen has in terms of protecting the value of their assets or their investments. So especially if you have obligations that are coming up in foreign currency, then it's probably a sensible thing to be invested in dollar-denominated securities, just to protect the value of your assets and your investments. So especially those sort of people, it's very important to do that.
Well, that's about the size of the conversation this morning, but let's throw in our last message in. I see Gilbert Musa from Festac, and it goes on: Nigeria's still import dependent. The question is, what steps are we taking to ensure we increase local production? Since 1984 and 1997, when economists in Nigeria realized a huge appetite for foreign goods, what steps was taken to encourage SMEs since 2001 till date? The answer, Gilbert Musa says, is blowing in the Hamilton wind as we speak.
Yeah, I mean, if we had done that, then maybe we wouldn't be in this current situation, right? Where we aren't so import dependent, right? So he's mentioned a very critical point. If we're able to find a way around getting a lot more domestic production, then that demand sort of reduces.
Well, that's about the size of Business Express this morning, and we've been talking about Nigeria's exchange rate situation, and our guest has been Kayode Olayemi, founder, Thrive Financial Advisors. Thank you for your expertise and knowledge this morning.
All right, thanks for having me.
I do have a great Monday.
All right, bye.
And everyone, that's the size of the show this morning. Stay tuned, still more up ahead.
Okay.
All right, thank you.